Fed approved its first rate hike in 3 years this week, with more expected to come. But for the moment, we are more interested in the reaction from Beijing. Welcome to the Daily Forkast, March 18th, 2022. I'm Megha Chaddah of Forkast, covering all things blockchain. Beijing has said it will be closely monitoring foreign exchange activities in case capital outflows are triggered by the Fed's hikes. So what could that involve and what might it mean for the rollout of the digital yuan? We'll take a look at that plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's kick off with a major development in Russia then. With the country facing a barrage of financial sanctions due to its invasion of Ukraine, cryptocurrency has emerged as a safe haven option. And now, the Russian central bank has given the country's largest bank, Sberbank, a license to issue and exchange digital assets. The move could help the bank to dampen the effect of the sanctions imposed on it by both the US and UK, which caused it to pull out of Europe. In a statement issued to Russian media earlier this month, it said it was experiencing abnormal cash outflows and threats to the safety of its employees and branches in Europe. The bank's plan to utilize crypto is not new. Back in 2020, Sberbank said it was working with JP Morgan on the development of its own cryptocurrency, Sbercoin, which was expected to be a stablecoin. The move also comes just 2 months after Russia's central bank called for a total ban of cryptocurrency, and 1 month after the Ministry of Finance presented a draft bill on the regulation of crypto to the Russian government. And over in China, a big move in the social media space, as one of the biggest platforms in the country, Weibo, known as China's version of Twitter, has launched its NFT marketplace. Users are now able to mint their original Weibo posts into NFTs and sell them, with the revenue being gained settled in their accounts twice a month. A Weibo marketplace representative told Forkast that if the minted post is found to be plagiarized, the seller could suffer penalties. However, the representative also clarified that there are no clear rules on how to deal with these issues just yet. And Weibo's NFT marketplace is the latest addition in the list of social media platforms utilizing the technology. Back in January, Twitter launched the option of having a hexagonal NFT profile picture. But Weibo is well ahead of some of the crowd, as Meta CEO Mark Zuckerberg said on Wednesday that they are working on an NFT feature for Instagram. There's no date for the launch of that as yet. You can find those stories and lots more at Forkast.News. And staying in China, with concerns over capital outflows being triggered by the Fed's rate hike, the State Administration of Foreign Exchange has said it will be keeping a close watch to ensure stable operation of the forex market. Forkast Timmy Shen takes a look at what that could mean.
In a statement released on Wednesday, the regulator said it will strengthen foreign exchange market monitoring, help guide market players, and actively prevent and diffuse external shock risks. The concerns over capital outflows were raised after the Fed decided to raise the federal funds rate by 1/4 of a percentage point to a target range of 0.25 to 0.5%, while also warning of more hikes to come. One expert told Forkast that with pressure building on China's economy, investments outside the country could look more attractive as a result. However, he's not certain how big an issue that is for everyday investors.
Most Chinese retail investors are not confident enough about putting their money into Europe or into the US because they don't know about the companies that well.
In terms of monitoring outflows, Sullivan says that in the past, authorities have struggled to fully control what cash leaving a country was being used for, and that a digital yuan could offer a solution.
They are very keen to control as much as possible. And again, if you go to a digital RMB, that gives them exactly that. They can see exactly what you're spending your money on, and they can take and make policy appropriately.
Shanghai-based fintech consultant Richard Torrance says that while the ECNY is still only in use for domestic trials at present, he agrees that in future, any outflows that attempt to take advantage of rate hikes could easily be curtailed by the fact that the ECNY is a controllable currency. However, he also says that the ECNY's use of smart contracts could effectively allow China to increase foreign usage, as both the recipient and the use for the cash would be known. For Forkast, I'm Timmy Shan, Taipei, Taiwan.
Both the White House and the European Union have made some regulatory moves when it comes to the largely unregulated world of crypto. How could these developments change the landscape for the industry? Who better than Adrian Brink of Anoma to chat all things disintermediation? Great to have you with us, Adrian.
Glad to be back.
Adrian, to kick it off, Joe Biden's executive order on digital assets is finally out, and there's numerous topics it covers, from mitigating systemic risk to ensuring global financial stability, among many others. Now, does the announcement change things materially for projects in existence and those that are being developed?
I think practically speaking, not a lot. I think all of us were quite happy when we read this because it doesn't say anything very specific. It says we should look at the tech and we should understand what's going on. This is honestly a response you'd expect from any sort of reasonable government that doesn't want its financial system to fall over because some third party, whether this is crypto or another nation state, does something. Practically speaking, though, I think on the ground this changes very little. It's still mostly up to the SEC whether to prosecute American projects or not. So I still think that risk hasn't been cleared. The main thing around how do projects that are mainly US-based deal with regulations, that really hasn't been addressed, but maybe there's now a greater push for sort of resolving this a little bit.
The White House order also talks about coordinated action across American government agencies to tackle risks of illicit finance. Now, can government bodies really exert control over disintermediated financial systems?
For one, it's obviously much harder in some ways to insert influence over these systems, but in other ways it's much easier because they're completely transparent and trackable on chain right now. And because they're not really yet integrated with real-world economies, you always have to have the fiat on-off ramps. The big thing, though, is pretty much all Western governments are already failing at preventing the existing financial system being used for illicit finance. I mean, the Mexican drug cartels are famous for using HSBC or Danske Bank or Bank of America to launder billions of dollars for their purposes. There's really, if you want to do illicit things, there's no need to use crypto. The existing financial system is just so much better at helping you out in this case than crypto could ever be. And since the sort of centralized governments can't really do anything about this, it seems, I have a hard time seeing how they're going to be very effective in implementing policies that prevent this in the cryptocurrency space.
And lastly, over in Europe, a proposal focusing on energy consumption by proof-of-work currencies could have halted the use and trading of some of the biggest crypto out there, including Bitcoin and Ethereum. While this has been shut down for now, do you see an eventual shift to proof-of-stake or other energy-friendly protocols?
There is absolutely need for a proof-of-work chain, I think, in the long term, because it provides a very different security guarantee than a proof-of-stake system does. I'm not saying that everything should be proof-of-work, but there's probably room for a couple of proof-of-work chains. The other thing is, this is Europe, and as most European policy, it's completely uncooked and badly thought out, because you've kind of got to ask yourself the question, right? Once Ethereum switches to proof-of-stake, our early Ether mined under proof of work now ineligible for trading, are new ones eligible for trading? How does this actually play out in practice? Pretty much my advice to most regulators in this sense is let the market determine it. Don't try to sort of say this is an acceptable use case for energy and this isn't an acceptable energy use case. Very much focus on how do we produce clean energy and not what are we allowed to spend energy on. Oh, maybe also the last thing here is the energy consumption by proof-of-work mining is negligible and has zero significant impact on global climate change. And we should just all remember this, that sort of the biggest contributor is probably global shipping, and no one seems to be too concerned about doing anything about this. And it gets you nice brownie points as a politician if you think about these things, but practically speaking, it does nothing to save the planet.
Well, focusing on clean energy production is the critical need of the hour. Adrian Brink, thanks so much for joining us today.
Thank you very much.
And that's the Daily Forecast from our vantage point right here in Asia, Monday to Friday. For more, visit Forkast.News or Megha Chaddah. Until next time.